Hey there, and welcome to another dose of due diligence on Palantir. I currently own 824 shares of Palantir at an average cost basis of $22.20 per share. And in this video, I'm going to tell you why I'm still very bullish on Palantir in the long run, despite the fact that over the past couple of weeks, the price of the stock has dropped over 36%. I'm also going to touch on two key pieces of information about Palantir stock that I haven't really seen people discussing that much. Now, at this point, you might be asking, how can I possibly still be bullish on Palantir after seeing the results of the past couple of weeks and months, and after looking at this unrealized loss of over 4,000 US dollars that I have on the books right now? You might be asking, am I nervous? And the genuine answer is no, I'm not. First of all, I'm only investing with money that I can afford to lose, and so should you. Now, I'm not saying that I want to lose this money, of course I don't. But I'm not relying on it to pay my bills. I'm not relying on it for survival. Secondly, my investment in Palantir is a buy and hold position that I plan on keeping for at least 5 to 10 years, if not longer, because I believe it's going to take at least that long before we start to see the real potential and the real results of this company. This short-term price action we're seeing right now doesn't mean jack, especially if 5 to 10 years from now, the company's revenues have 10x and it's a global behemoth. In fact, I see this dip as an excellent buying opportunity, and it's just helping me get to my goal of 1,000 shares of Palantir at a much lower cost than I would have been able to do previously. Third, Palantir is a legit company with solid fundamentals, and regardless of what you think of its valuation currently, this is a company with great revenue growth, cash flow, an impeccable balance sheet, and a great suite of clients that include some of the largest and most respectable institutions and organizations in the world. Also, I think it's important to note that while Palantir is considered by some to be a meme stock, it's not like your GameStop situation where you've got a company in decline that's trying to revive itself and has garnered a lot of attention for reasons that aren't necessarily related to the fundamental business model of the company. Palantir is on the way up. It's got revolutionary products for enterprise resource management, and it's a world leader in data analytics and artificial intelligence. Also, it's operating in pretty much every single sector and industry that you can imagine. It's pretty much industry agnostic, and I truly believe that the total addressable market is just going to be massive. Now, I've already been over in much greater detail why I think that Palantir's growth is going to have a snowball type effect over the next few years. So I'm not going to rehash all of that here, but I do just want to stress again that it's going to take time. Patient capital always outperforms impatient capital in the long term. So now let's discuss those two key points of information I mentioned previously that haven't been getting enough attention. They both have to do with Palantir's ability to scale revenue without also scaling expenses. And one of the main bear arguments against Palantir so far has been that it's not an actual SaaS company, it's more of a glorified consultancy, so people will say, and therefore it's not going to be able to scale fast or cost effectively. But these two data points that I want to talk about today pretty much tear those arguments to shreds. The first one is cost of revenue. And just for those who might not know what that is, basically cost of revenue is how much money it costs to bring your product or service from manufacturing all the way through to delivery. So in the case of Palantir, it's not an actual physical product, but it's the software product. So cost of revenue would include the ongoing cost to acquire new clients. So your sales force, your marketing team, your people that are going out and helping customers install and deal with bugs and fixes and customer support and all that. And if we look at the data from Palantir's Q3 earnings filings, you can see that from 2020 Q3 to 2021 Q3, the cost and revenue went down from $150,000 in the quarter to $86,000 in the quarter. So that's a massive decrease in the cost of revenue of almost 50%, just less than 50%. To visualize this in another way, as a percentage of the top line sales, the cost of revenue for Palantir went down from 52% in Q3 2020 to 22% in Q3 2021. This is a massive drop in the cost of revenue year over year, and this is not what you would expect to see of a company that's supposed to be a glorified consultancy, not a SaaS. We are seeing the beginning signs of Palantir being able to scale up its operations, to scale up its sales and marketing pipeline much faster and much more effectively, and that is coming through in the results. This also aligns with the messaging that we've seen from Palantir over the past year, where they're saying as they launch some of these new projects like Palantir Apollo, they're able to deploy the software in a matter of hours as opposed to previously weeks, and things are just getting better and faster and more efficient all around. And to reinforce all of this, there's one more interesting data point that I want to talk about today, and that is the revenue per employee. So if Palantir was a consultancy, you would expect there to be a linear relationship between the number of employees that you have and the amount of revenue that you can generate, because a person can only work so many hours in a day and you can only squeeze so much productivity out of one single employee. So you would see that the number of employees and the revenue would scale approximately at the same rate. But let's look at the data from Palantir to see if that holds true. So as you can see, in 2020, Palantir had around 2,450 employees at any given point. If we take the average of all the data points here, we can estimate that the number of employees Palantir had throughout the year was around 2,450. And in that year, Palantir's total revenue was $1.1 billion, which works out to revenue per employee of just under $450,000. In 2021, however, Palantir added a couple hundred employees to its team, and it ended the year with 2,733. So if we take 2,730 employees as the figure, just to be conservative, because Palantir probably didn't have that many employees throughout the entirety of the year, and if we look at the trailing 12 months revenue for Palantir, which is currently 1.43 billion, then we're looking at revenue per employee of $525,000. This clearly shows a divergence that you wouldn't expect if Palantir was a glorified consultancy like some of the bears say. To conceptualize this in another way, the growth rate of the number of employees for Palantir was just over 11%, but the growth rate for the revenue was well over 30%. And I honestly expect that these numbers will continue to diverge at an increasingly rapid rate because this is very early days. Now, don't get me wrong, it's important to stay up to date on the bear thesis for Palantir, or for any investment for that matter, even if you're super bullish, because refusing to change an opinion in light of new information is the definition of stupidity, especially if you have a lot of money on the line. But in this case, I have not seen any new information that changes my opinion about Palantir. The underlying fundamentals remain strong, and I honestly believe that the stock is currently oversold. If you enjoyed this video, please check out this one up here because I think you might like it as well. Thanks so much for watching, and I'll see you in the next one.